Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Bird Construction stock so we can determine if it's a buy or a sell. Bird Construction provides construction services to all types of sectors, including energy, mining, commercial, retail, and nuclear. The company is headquartered in Ontario, Canada, and was founded in 1920. Let's get started with the model. This is a small cap company. 476 million market cap. They're trading at $8.85 a share, and they have 54 million shares outstanding. We are looking at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have negative free cash flow in 2019, a nice positive in 2020. It did come down in 2021 to only 24 million and dropped a little more in 2022 to 16 million. Net income is a profit or loss on the income statement. It's revenue minus expenses. And that's positive each year. It goes up a little bit from 9 million to 50 million. Revenue is a sales for the company, and that also goes up nicely from 1.4 billion to 2.4 billion. Let's look at the capital structure. 270 million of equity, 150 million of debt. They're 65% equity, 35% debt. Their net debt is 37 million. And I used a WACC of 11%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 900 million. We discounted those numbers back to today using the weighted average cost of capital. And we get a value of the company of $800 million. We divide that by 54 million shares. And we get a calculated stock price of $15. They're trading at $9, so they're trading at a 40% discount. It's a buy according to the model. The website Simply Wall Street values the company at $13. They're saying it's 31% undervalued. 9 analysts priced this stock, and the average price target is $11.44, so they're saying it's 30% undervalued. They pay a monthly dividend, which I know investors really like, and they recently raised their dividend to 4 cents. They were paying 3 cents for a while. Their yield is 1.6%, which is 50% of their free cash flow, 16% of their net income. This is where the stock has been trading since 2002. So you can see it was really all over the place. At its peak, it was about $18, $19 back in 2005, 2006. At a couple of points in 2002, 2003, 2006, 2009, and 2020, it looks like it was below $1. The company has been around for over 100 years, so I think they're pretty stable. It's impossible for a company's stock price to go to zero. If they're profitable, they're bringing in positive cash flow. Even if there's a lot of bears in the stock, it can't go to zero. It could get really low. So it looks like this company has gotten through some really difficult times because their stock got real low. So it could have been all market fluctuations, but it could have been problems with the company or problems with the industry. There are 37 companies in the same industry as Bird. Most of these companies are in the US, so I converted the market caps to Canadian dollars. They rank 24th in market cap out of the 37 companies. They do pay a good dividend, much higher than average. They have a good price to book, a really good PE, an amazing price to sales, but not such a great price to free cash flow. Bringing in sales is one thing, but turning that into positive cash flow is another thing. But it is likely they're investing back into their business to grow it. They're putting a lot into CapEx, which is why their free cash flow isn't so strong. So to summarize, I have them trading at a 40% discount. I rank their free cash flow as 4 out of 10, their revenue 6 out of 10, and their ratio 6 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.